Hello, everyone, and thank you for joining us today to listen in on our Back Office Bundled series. Today, we'll be discussing lack of visibility. I'm joined today by Mike Pysek, Senior Manager Accounting Outsourcing here at Armanino, and Andrea Mannering, Senior Manager of our Strategic Finance Outsourcing Group here at Armanino. Mike and Andrea, thank you guys so much for joining us today. I'm sure you have a lot to discuss with us.
Yeah, thank you so much, Nyla. So we thought we would take just a few minutes today to talk about what we're calling lack of visibility. We see a lot of clients that are experiencing pain points around a lack of visibility, and we thought we would share some knowledge. So what we often see is clients experiencing, pain around a lack of cohesive, like company-wide reporting and accounting. And we're referring to the lack of visibility. So we're going to take a few minutes today to talk about what that means for accounting and finance.
Cool. Well, thanks, Andrea. I'm going to throw this back on you. What do you think the biggest barrier is to creating high quality, robust financial statements and financial analysis?
Yeah, thanks, Mike. Really, the first thing we can run into, poor accounting. Like if the underlying accounting is not in good shape, oftentimes we're engaged in finance to build a financial forecast. Usually it is in anticipation of some kind of like significant event like fundraising, M&A, and if the underlying accounting is poor, it really stalls the whole process, kind of a garbage in, garbage out situation. I know we can prevent this for clients, right, Mike?
Totally. I mean, that's something near and dear to my heart. Is good accounting is just more than bookkeeping. It's more than managing your bank account. It's understanding the actual transactions. For example, making sure your cost of sales is accurate, matching your revenues and expenses, making sure all the work is recorded in the proper period. You can always adjust for that and to make your books accurate at month end and compensate for correct timing issues, but you have to go through the work in order to present an accurate financial picture. It's important to understand your balance sheet as well as your P&L, making sure every number on both is accurate and supportable.
So if you think about it, a CEO really needs to have a strong understanding of their core economics, and they need visibility into their core economics in order to drive value discussions. If you're negotiating or in process of fundraising or some sort of due diligence, some M&A type of activity, you want to be in a position where you are telling your story from a finance perspective and really driving that discussion versus being in a position where you're more of a price taker in those negotiations. Having that visibility is just super important. Anything else, Mike?
Yeah, totally agree with that, Andrea. I mean, poor accounting can also leave you with no investor or bank caliber financial materials. You never want to go back and redo accounting work. It's not only wasted time and money, it's also embarrassing if you have to restate your results that you've already reported. I mean, that just destroys your credibility with investors, with stakeholders. So you really should spend time in the beginning to set up efficient processes that are crucial to getting a high quality financial output you need.
Perfect. Yeah, thank you so much, Mike. So again, just never underestimate the value associated with having that visibility that results from robust accounting and finance reporting capabilities. So even though it's not kind of your core ops, it could still affect the value of your business. Thank you guys so much for spending the time today to hear about a lack of visibility and what it can mean.
Yep. Thank you, everybody.
Great. Thank you guys so much. To the audience, stay tuned. We have other videos coming your way.